So on to an interesting question that we've had, which is, with all this talk of recession and banking contagion, banking collapse and everything that's going on, does this change your approach to your trading?
This is fascinating.
Yes.
Because Ali and I, we were literally just sat in a coffee shop having this conversation, and this chap literally interrupted our conversation. So what's going to happen? It's all, and it was interesting because his tone, his sentiment was quite negative. Oh, we're in for a recession, aren't we? You know, he just literally wanted to have a chat. He heard us talking like this and said, oh, what's happening? What do you think? You know, I just got told that, you know, by some guy who predicted the financial crisis, he said that it's all going to happen within the next 60 days.
Yeah.
So
buckle up, everyone. It's the end of the world is coming. Yeah.
So what's my point? Well, the first point is on this is there feels like there's a lot of pessimism out there.
Yes.
And sometimes when there's a lot of pessimism, the market doesn't do what people expect. A lot of the time, the market doesn't do what the majority expect. I don't know. That's not a guarantee for anything, but certainly if we look at the market itself, and I'm talking about the US stock market, S&P 500, that bottomed in early-ish October of 2022. So, and we're filming this in nearly April of 2023, and as the point of filming, it's still well off of its lows, and yet there's a heightened level of pessimism out there. So that doesn't quite sit with where the stock market is, or should I say the stock market doesn't sit with where that level of pessimism is. Now, maybe it's going to catch up. Maybe the fundamentals are going to catch up with the stock market itself, and the stock market will start to reflect those fundamentals. But I think we have to be very careful of getting caught up in that pessimism because, and I'll tell another story, I'll let you talk for a second, but when something is obvious, then we have to read cues from the price itself.
Yes, that's in line with exactly what I was going to say. It's very easy. It's very easy for traders to follow a similar path as that guy was saying in the coffee shop. Is they'll hear something on CNBC and they'll hang on that. So maybe they're in a position they get a setup that's short. For example, they've got a couple of trades. They've placed them short, and then they hear some supporting evidence to suggest the markets are going to crash, the end of the world is coming. They're stopped out of their trades because the market sentiment moves in the opposite way to the overall sentiment of what's being said in the news, and then they pile in again and again because they get blinkered into the one thing that they heard that supports the current trades they're taking. So in a way, to answer it directly in terms of, will I be changing what I'm doing? No. Am I keeping an eye on everything and aware of what we're seeing? Yes. But overall, my trading isn't going to change because I can't predict the future, just like that guy, I think, expected us to do. Say, well, hang on, we'll get our crystal ball out and tell you what's going to happen. And it's very easy for newer traders to get sucked into something they hear that correlates with what they're either doing or want to do. So they have to be very careful because there's more and more doom and gloom news out there at the moment, but as you said, the market, the S&P, the major markets aren't reflecting it.
No, not overly. I mean, we've seen a lot of turmoil in the markets, and I think especially we've seen the biggest volatility in the bond markets.
Yes.
Huge volatility there. But the stock markets are always they've got maybe a general level of volatility at the moment, but we haven't seen in recent weeks ridiculous volatility, which we could see.
Yeah.
You know, when people start getting scared about banking, you know, stocks, although they're, you know, it's much more contained. But then all of a sudden we had the Credit Suisse, and then we've had concerns about Deutsche Bank in Europe and as well. And considering those concerns, we've not seen, you know, any major. And I have to be careful because the markets will probably go down now. But as yet, we haven't seen any major moves. And coming back to what you're saying, so do you change your view or change your trading style? No. One thing leading on from what I was saying earlier on, and people can go and check this out. Do check this out. The 13th of October, 2022. And I remember this, we were talking about this earlier on. I was actually doing a presentation for a bank that day, and I was sat in a Black Sheep coffee shop in Liverpool Street. Many people know that. And so I was going off to do this presentation, and it was big CPI inflation coming out of the US that day. Because I knew I was going to be busy, I'd put orders in to trigger me in if such certain things happened. Just so happened, and I was there during the news, but I had to put these orders in because I was doing it all off my phone. So the market started to move. The inflation came out red hot. So it was high inflation. So that's dollar supportive. It's bad for stocks. Stock market literally collapsed in the matter of seconds. The dollar flew up, so the euro dollar and the other currencies flew down. Yeah. And so I got triggered into trades. I'm thinking, okay, this is all right, fine. Everything's set. Went off to do this presentation. And it was a live presentation, live market presentation. And so within half an hour, I could see, oh, this is interesting. Oh, they're doing a little retracement already. That's fine, And then by the end of the day, the market had completely reversed. So we'd seen reversals on Eurodollar and the stock market as well. And I think coming back to what we're talking about right here is you have to, price is everything.
Yes.
The market prices in everything at any one moment in time. And if the market doesn't want to go down on a key fundamental event like that, which should have been bearish for the stock markets because higher inflation meant, higher interest rates and all of that, and the market just turns around and does a big reversal, you have to listen to what the market's telling you. The market is always whispering in your ear if you're willing to listen.
Great advice there.